Hey, Jason Wood here, VA loan guy, host of Armed and Ready podcast. We've got a really great guest today, Erik Upchurch. He's going to be talking to us about real estate investing and VA loans. Let's check it out. Hi, I'm Jason Wood, the VA loan guy, host of Armed and Ready podcast. And today we have an awesome episode for you. One of my good friends, Erik Upchurch, is here joining us on the show. Erik, thanks for coming, man.
Thank you for having me.
It's really cool to see you. The listeners don't know this, but we know each other from a group that we're part of and gotten to spend some time together before. So what's really awesome is you're in town, for a conference and able to squeeze us in. So. Yeah. I really appreciate that. What we'd like to do here is kind of explain to people your military to civilian transition a little bit. What'd you do in the military? How'd you get to where you are, and what are you doing right now?
Yeah, actually, this is maybe a good tie-in. You're the VA loan guy, so when I transitioned out of the military, I was special operations. I loved what I did, but I was tired of getting shot at, and I had my first kid, and I said, it's time to go home, right? So my wife and I moved back to the San Francisco Bay Area, where she's from. And, if you're an E6 in the military, in the Army or whatever, making, 46 grand a year, your eyes are pretty wide open when you're moving back to the San Francisco Bay Area. So how am I going to make it work? What am I going to do? How am I going to, sustain my family? Thankfully, maybe there's a little bit more opportunity for higher paying jobs in California, give or take your skill set, but I was able to go and just be pretty smart about it. I had gone through kind of the Dave Ramsey total money makeover stuff,
right?
Way beyond the Dave Ramsey times of my life now, but it's an essential piece, is that initial, getting your financial house in order before you start doing investing and some other stuff. So good debt versus bad debt. It was time to, now that we're out of bad debt, it's time to get some good debt. So we were pretty smart about what we were doing, but a little unintentional at the beginning. We just knew that we could use the power of the VA loan, which would get us into a house. I mean, who has, coming right out of the military, who has $100,000, 20% down on a $500,000 house? Who has that sitting around when you're just getting out of the military as an E6?
Yeah.
So thankfully, we had access to the VA loan. We bought a $500,000, which was, by the way, the cheapest house that we could find in the area that we moved back to at the time. And I could, with my W-2 job that I had started when I left the military, I could just barely afford the payment on that with the VA loan. So a $500,000 house. 2 years later, that house had appreciated, just market appreciation. We didn't do anything to it. It was beautiful inside. It went up to $690,000. And my wife and I kind of looked at each other and said, well, it's been 2 years. We don't have to pay capital gains tax, so should we sell this property now and try to do it again? So we kind of found a little bit, kind of a strategy in this, and it's really now kind of known relatively well in the real estate investing world as live-in flipping. You're really just either forcing appreciation or using market appreciation, or sometimes a combination of both, to increase the value of your property. So. Yeah, we're really fortunate to be able to do that.
That's cool. Yeah, so you guys flipped, more than one home, right?
Yeah.
A couple?
Yeah, so from there, we moved to a beach community. And so the whole time, one thing I did understand at least, is that if you're going to choose to do this, it's location, location, location. You either have to be near something that's attractive, like a good school district. You have to be in a good school district that would be good for resale, or maybe the ocean, right? Beachfront property, or, I don't know. So the next house, we were actually just on a hike with our kids, and we went and looked at a house and in a town called Capitola, which is a beautiful little beach town near Santa Cruz, in Northern California. And we purchased with the VA loan a house that was 2 blocks from the beach, bought it for $900. And in 9 months, we actually forced some appreciation, which I'll talk about how we did that in a second. But within 9 months, it had appreciated $250,000 in 9 months.
Wow.
So pretty amazing. And actually, so I'll just get right into the kind of the benefits of networking. I went to a single family fix and flip conference I believe in coaching. I believe in hiring coaches. If you want to be in your A game, have a coach. Michael Phelps. I mean, name somebody, an athlete or anybody that you admire.
Everyone's got a coach. Yeah.
If you're in a place that where I would like to be, I want to hire somebody who's already there and has gone through those. So I started kind of dabbling with that and went to a single family event and paid a lot of money to go, and I got upsold the whole way through. It was one of those HGTV things. So if you guys have been out there and you've done one of those HGTV seminars, it can work okay for you. You don't have to be scared about it, but the way it worked wasn't the traditional way. I couldn't actually execute what they were teaching me at the thing, although I did get a good base knowledge of how to invest in real estate. What I got the most out of was the relationships that I built there. I met a contractor at that event who I became friends with, and he built and renovated high-end custom homes. So he worked on this property that I just bought near the beach.
Okay.
So all I had to do was make multiple trips to Home Depot using my veteran discount and buy all the materials, and I had to pay his labor for the guys that were working in the property. So after 6 weeks of renovation, we converted a 4-bedroom property into a 3-bedroom, so most people wouldn't want to downsize it, but we were looking at the neighborhood and going, this is almost like a retirement community. Not a retirement community, but we were looking at our neighbors and going, people are retiring here, right? They get their dream house by the beach. And so we were able to make it more spacious inside because we got collapsed that 4th bedroom. Anyway, just being very intentional with what we were doing, what the exit strategy looks like, and again, using the VA loan. So it's pretty neat.
That's really cool.
Yeah.
So fast forward to where you and I got connected, right? Which is the group, and part of this book too is active duty passive income.
Yeah.
And for our audience out there, so active duty passive income is basically an education provider for active duty and veterans to learn how to invest in real estate. And it kind of takes people through the whole spectrum of learning how to buy your first house, all the way up to owning and buying commercial real estate, right? And there's opportunities for education and coaching in all those different phases. And you guys collaborated and came up with a book. So tell me a little bit about how you kind of got connected with the main group, the founders of ADPI, and how you guys ended up publishing something.
Yeah, so our CEO and founder, Mark-Jan Sitch, who's active duty Marine still, I found him through Facebook when the active duty passive income community was about 100 members on the Facebook group.
Wow.
And there was 3 of us, and I just said, I have a passion for this. I bought a couple turnkey properties that I recently just kind of gone through. I was interested in turnkey real estate because I wanted to be as passive as I could. And I said, I have that knowledge, and I've done some private lending at that time. And I just was like, I've done a lot of little things, invested with my self-directed IRA. And so through talking to Mark-Jan and Mike Foster, who's now our podcast host as well, I just showed them that I'd be a great asset as ADPI was starting up. And now our Facebook group is, at the time of this recording, 8,000 members and growing at about 10% a month and 94% engagement rate, which is it's insane. And we have 600 people waiting to get into the group at any given time. We can't even keep up with it right now. So, but what that allows us to do is really amplify the things that we give, the things that we have. Our book, Military House Hacking, which I'll talk about, that was the actual question you asked, was how we started that. Mark-Jan had already had the ebook, the basis for this created, and he was giving it away. And so then we kind of revamped that in 2018, and we spent a lot of time. If you're ever thinking about writing your own book, don't set a 3-month timeline to do it. It's not a good idea. So it was a lot of late nights, and my wife's a saint for putting up with all that. So we added our personal stories to how we military house hacked, and there are several different examples of how you can do that. But so it's been a great experience. We now have over 16 things that I just counted the other day because I post all the time of what we give away for free. We have 16 things that we give away for free, from freedom sessions, we call it, with Mike Foster, to get people started and talk to people, and to the book. This book is free on our website. Anybody can go there and get the book. It's also on Amazon. But yeah, just tax consultation is free. And so kind of pretty neat that we have this group that we've created. We're providing so much value and so much free content. And then if somebody wants to go to the next step, we have coaching and masterminds and things that they can really amp it up. And some of our multifamily coaching students are submitting offers on deals right now. And it's just the first round of coaching students. So pretty amazing. Yeah.
So house hacking, I mean, that term can be kind of ambiguous. So
yeah.
Military house hacking, in the way that I understand it, and correct me if I'm wrong, but is really learning how to leverage like your situation while you're in the military to create wealth through real estate. So like one of the coolest things is when you're active duty, you have an allowance for housing, your BAH, right? And so that BAH is a tax-free allotment that you get every single month. And if you live on base, it just gets sucked right out of your paycheck. You don't see it.
Yeah.
But if you live off base and, provided your pay grade and stuff allows you to do so, now you can start looking at leveraging those dollars to pay for your home, like to pay for a mortgage. Yeah. And when you have your VA eligibility, you can finance your home with zero down payment, and your BAH may cover the majority or all of your mortgage payment, and that BAH is a tax-free amount.
Yep.
So you're getting incentivized, really, I think, by the government to build wealth through real estate. It's just not really well known while you're in the military.
Yeah.
But you're getting incentivized to buy a house. It's tax-free money, and you're growing wealth through real estate by the appreciation. And the hacking part of it, the way that I see it, is you're at a duty station for 3 years on average, maybe 6 years, and you get orders to go to a different duty station, PCS orders, and you go across the country or somewhere else, and now you need another place to live. Mm-hmm. Well, you can retain that home at the base you're departing from and purchase another home at the base you're arriving at,
right.
And now you've got 2 homes. And there's no limit on how many VA loans you can have active at one time. There's some math that goes behind it for how much down payment you may or may not need on house 2, 3, or 4. But this is really, my interpretation of how you house hack. So, by the time you've spent, 20 years in the military, the theory is that, you could have a great portfolio of real estate that all along while you were serving and doing your job in the military is now generating you passive cash flow from the rentals of those departed homes that you bought when you were stationed in all these different bases.
Absolutely. There are strategies, whether you're active duty or a veteran. My story, my hack is really just the live and flip with the VA loan. So whether you're active duty, there are a lot of strategies you can do too. I had a young lieutenant message me the other day and said, "Hey, read your book. I bought a house at Fort Benning, and he's renting out the other rooms to lieutenant buddies of his." That is a hack. That is because he's no longer actually paying his mortgage. His tenants, his buddy tenants, that are paying him rent, are paying his mortgage for him. So he's just banking his BAH, and his tenants are increasing his net worth every month because they're paying down his mortgage for him. And you can do this, as you know, but for your listeners, you can do this with a single family house, like a lot of people do, up to a 4-unit property. And there's some stipulations, some other things where you can actually go a little bit higher than that if you have dual entitlement.
Right.
But imagine being, say, a single guy. I'll just take me, for example. If I'm a young lieutenant or an E5 just moved off base, I can buy a 4-plex in my town. And you obviously have to hit debt to income, and you can talk all about that all day long. But look, buy a 4-plex and rent out the other 3 units, live in one. It's an owner-occupied loan. And then if you get orders somewhere else, you can refinance that to a conventional loan and buy another one. And maybe you can keep it in a VA loan. I don't know. You can talk more intelligently about that.
Sometimes,
But what an amazing thing. And so if you move, let's say you move every 2 years, you're buying a 4-plex at every place that you move. Over a 20-year career, you have 40 doors that you paid $0 out of pocket for. If you're refinancing them and all that stuff. So pretty amazing hack. And only the United States military gets to do that, which is pretty amazing.
Such a big benefit.
Anybody who served.
And so, and part of my passion, I know yours is too, is just educating veterans and military folks on this, because it's such an incredible opportunity. I think sometimes it gets brushed under the rug when you talk about buying a house or real estate, and it's just kind of like one of those things that people don't put a whole lot of thought or effort into. But really, being a military person, the advantages are way greater than just a civilian trying to buy a house. I mean, the leverage you have is huge. So you took your house hacking, and now you've grown that into quite a bit into like commercial, like multiple doors. I mean, you're buying 30, 20 door complexes.
Bigger than that. I mean, the smallest we want to buy now is 80 units, and that might sound scary to some people just getting started, but honestly, if I've also flipped or held 7 single-family homes between 2018 and 2019 with a buddy of mine. But what we found was, and through some of these conferences and my coaches and mentors, is that it's the same amount of work to flip and refinance a single-family house and for a buy and hold strategy than it is to buy an 80-unit multifamily apartment complex. And that sounds like no way. There's no way that's possible. It is. You have a team built around you for the multifamily. You just have to know what you're doing. In either scenario, you need to know what you're doing. So that's why we always say, learn, network your butt off, and add value to others and take action. If you do those things over and over again, success will find you because you're never stopping. You're never quitting. You're always, putting that best foot forward. So, and one thing I want to say too about the people who want to do single family hacking, military house hacking, we teach people in the military, which is just not taught, that when you buy your primary residence at your duty station, think of it as an investment first when you buy that thing.
Right.
So it's a really smart thing because most likely that property is going to end up as an investment property, as a rental. So if you buy it knowing, and there's easy kind of back of the napkin math you can do. There's something called the 1% rule. If you buy a house for $150,000, it should be able to rent close to $1,500 a month. So look at the rental market around that area. And in some markets, that's going to sound a little tight, right?
Right.
But it depends on, where you are. And, maybe it's $1,400 or maybe it's $1,200 and it'll pay your mortgage and you'll still have a house and somebody else is paying it down and you can get a good tenant in there. Just for example, the first house I bought I was only cash flowing $80 a month. That's not even cash flowing because by the time your AC unit goes out,
that's gone.
You've eaten up 7 months of your of that income. But you also want to make sure that there's that cushion in there because you're going to hire a third-party property manager and make sure that it's managed properly. Some people try and do it themselves, but when you're actively working in a W-2 or in the military, it's my recommendation that you have third-party property management for an investment.
Yeah, it's too much time to commit to that. And one of the things you mentioned is to look at it as an investment. And I see being in the mortgage business, and I've been in the mortgage business, this is the beginning of my 19th year. So in just learning people and behaviors and things like that, there's a lot of emotional attachment to a home, right? And I think you hit the nail right on the head when you mentioned that you need to have the perspective of this is an investment. And if you can wear that business cap rather than the heart cap when you're looking at real estate and buying it and trying to do something with it, then the opportunity, I think, for success with it is exponential, right? When you pull the emotion out of it and just go down to the business, the raw business.
Yeah, I couldn't agree more. And when I kind of realized that, and my wife kind of knows me as like a very business-minded guy anyway, but you may have a spouse, male or female, that is more interested in having a home, right? When I buy a house, a home to live in, I look at it as sticks and bricks. I mean, honestly, it's great, and my wife does a great job of making it a home, and it's beautiful and comfortable for our kids and everything. But we set it up so like, and most military families probably do. We set it up to like, hey, this is temporary lodging. We're going to be here for maybe 2 years. And in our case, as veterans, but civilians now, we still do that. And our kids are like, what's the next house going to look like, Dad? What's the backyard? What can we do? Can we build a fort? And that's all they care about.
That's cool.
Our mom and dad there is the house, have a nice roof over your head or whatever. And I'm looking at it from the business side every single time that I buy a property. In fact, even to the point where I'm going to use that IRL and refinance whenever I can, because when the numbers work, the numbers work.
That's right. It's about the math. So speaking about the math, you mentioned 80 doors and all that stuff, and that does sound daunting, right? And that's beyond the VA loan, right?
It's not daunting. It's great.
It sounds scary, but break it. I mean, we don't have a ton of time to get into all the details, but simplify that a little bit so that the person listening to this who's going, okay, I own a home, and it sounds amazing to own 80 doors, but I don't know how I'm even going to buy one more property, let alone something with 80 doors. So how do you take a person that's kind of in that position who wants to be there, but can't see past, like, I don't even have 20% down payment for the next house. How do I go buy this huge thing?
Yeah, so number one thing is, and so 18 months ago, I didn't even know what multifamily real estate investing was. 18 months ago, okay? And in 2019, we went from 0 to 571 doors in 1 year.
That's crazy.
So in 18 months, if I can do that with, active duty passive income, I have a full-time W-2 job still, wife, kids, the whole thing, right? If I can figure out how to do it, so can your viewers here, your audience. So, but you have to get educated. And so here's the way it looks. I went to a multifamily conference. I paid for coaching. I got very involved in that community to make sure that they understood that I was present, I was serious, I was capable, I was learning, I'm getting educated. And then relationships start to form. Once relationships start to form, markets and deals can then kind of find you. The first 2 deals I did were with other partners that I just met. And they said, hey, you want to join us on this thing? You can help us with the investor relations, do some due diligence, and then raise some capital. And that all maybe sounds a little scary too, but think about who's in your network. If you're a serious real estate investor, you should tell everybody in your network. The gas station attendant should know that you're a real estate investor wherever you go fill up your vehicle every day. Your boss at work, unless it gets you fired, should know that you're a real estate investor, right?
Right. Yeah, don't forget that.
Yeah. Everybody should know that you're interested in investing in real estate, and then that's how you kind of build your digital Rolodex. You start, and your aunts and uncles and your parents or whoever who's got money that you can raise. So don't let that piece of it scare you. But the way an 80 unit deal looks is you get it under contract, you submit a letter of intent to purchase, you negotiate back and forth a little bit, and then you put together a purchase and sale agreement with the sellers, and you line up financing. It's usually a Freddie Mac small balance loan for something that's above $1 million loan. These are non-recourse loans, so it's in an LLC. Anything 5 units or greater that would fall into. And then you get agency debt. So in this case, we had 80% loan to value. We raised the equity portion, the 20% that normally you would have to put up, which was like $1.25 million. We raised that from investors. And then there are SEC regulations, SEC exemptions, specifically Reg D, Regulation D 506B and Reg D 506C that allow us, non-dealer brokers, to actually raise capital from private investors. So that's what we're able to do.
Nice. And you guys obviously have, your performance and your spreadsheets and things like that. So you know how to analyze the property and know if it's a good deal.
You analyze it super conservatively. You want to definitely under-promise and over-deliver with your investors, because then they will come back to you. Our goal is, our target is to double our investors' money in 5 years. So a $100,000 investment with cash flow paid quarterly, and then the disposition or capital event at the end of the 5 years, a sale or a refinance or whatever it may be, will cumulatively double our investors' money over a 5-year period.
That's awesome.
Pretty awesome.
Yeah. So it's about your network. I mean, if that's where you want to go, I mean, what I took from that is, you got to know the right people, right? That can help you, because you don't have to do it all on your own. And that's I think the part that sounds so daunting is like, how do I take this on? And really the way you take it on is find guys like you and pair up.
Go to meetups, go to your local RIAs, travel for multifamily conferences, be present, be helpful. And so a lot of people say this is a people business. I would take it a step further and say this is a connecting of people business. If I like to be the connector. So when you're talking to somebody that you're trying to network with, actually look them in the eye and go and listen to what they're saying, because inherently people want to tell you what their kind of problems are. They'll tell you a gripe, maybe, in maybe a nice way. It doesn't sound negative, but if you take that and go, well, I know that John knows how to solve that problem. I just became valuable to 2 people instead of just a one-on-one. So I like to be the connector of people, and that, I think, it adds tremendous value to me, but also to the people that I'm connecting. So
totally.
Yeah.
Well, I wanted to give a shameless plug also. So there's a conference that we got to participate in together last year, the Military Influencers Conference.
Yeah.
And that's coming up again
this
year. Yeah, we're going back. It's in September, and ADPI and Amnet, we're some big sponsors of it. So we'll have an opportunity to present coordinate that. So if anybody, listening to this is really interested in getting connected and plugged into not only the real estate investing community, but really like the military community at large, that, the people that are really influencing and shaping that, transitional person, from military to civilian. And there's a lot of really, really just incredible people at these events and great people to connect with, network with, and build that sphere around. Then it's in September. It's in San Antonio this year, right?
San Antonio. It's at the Marriott River Center, I think it's called.
So check that out, Military Influencers Conference. We will be there. And then, of course, if anybody wants to get Military House Hacking, the book is free.
Free on the website. You can get a hard copy on Amazon, but it's free on the website.
And our private Facebook group, Active Duty Passive Income, if you're active duty or prior service.
Or spouse.
Or spouse.
Yep.
Yeah, I mean, and you have, a fire burning inside of you for this real estate stuff. We'd love to have you connect with us and join up and just learn. I mean, there's just so much education that happens in that forum on a daily basis. You'll learn a ton just by osmosis, just by reading posts.
100%. People saying that all the time. They look forward to scrolling through the feed and seeing what stuff we're posting, and the podcast is obviously great, and I'm glad you're doing this now too, because it's a great way to spread the word.
Totally. Yeah. Well, dude, I'm so glad we got this opportunity. We get to connect and you're in town. So thanks again, brother.
Yeah, man.
Appreciate it.
Yeah, good to see you again.
Thanks for stopping by today and listening to our podcast. If you have any questions, please reach out to us at valoanguy.us.